Well, one thing I certainly don't do on this channel is sugarcoat it. So, hey, let's just call it like it is. This week for interest rates was a complete shit show. It looked like last week banks actually kept spreads relatively in line. They kept us in the game, so to speak. But after $120 a barrel on one day and the persistence of oil ranging anywhere from 90 to slightly over 100 and just remaining in there and with no end in sight, the fear of this war, the uncertainty of what it's going to do to the economy, but more importantly, all the inflationary pressures of the cost of goods, airline flights. I mean, all consumables are going to be going up. Say it all the time. Traders are forward thinking. They're looking 3, 6, 9, 12 months down the road. Now we do not see any potential for interest rates cuts by the Federal Reserve. And it looks like we're going to have higher persistent interest rates here for some time. I just took a look at the 30-year fix. 14 days ago, we were roughly about 3/4 of a point lower on a 30-year fix than we are today for the same payback. And what do I mean by payback? Yield spread premium. And again, I say this all the time. If you do not know what yield spread premium is, then you and I need to have a conversation, because if you don't, you're costing yourself money today. We saw GDP pull back, right? The consumer's reeling. So the economy looks like it's pulling back. But the bigger thing that's on everyone's mind is now inflation in this conflict. And unfortunately, I don't see any resolution in sight. Having his son as the successor, said it earlier this week, it does nothing to change the vision, the ideology of that regime. So it's going to be something that looks like it's going to be lasting, if not just another week, but it could be going on even longer. So until we get some indication of a resolution, we are going to be sitting with these higher rates. We're now sitting on the highest interest rates that we've had in the last 7 months. When I was just telling you about 2 weeks ago that we were at 3.5-year lows. Oh, and who am I? My name is Kevin Weidbart, AKA the Mortgage Mouth. Make sure you hit that subscription button so you never miss a beat. The biggest things I think you can do is just be prepared. Get yourself qualified so that when we do see this dip, because it will be coming, you can make sure that you're ready to pull the trigger there. And then lastly, we always end the show every day with float or lock. I am in the camp of floating. If you need to lock, you have a reason to lock, you have a timeline, you have no choice, hey, lock it in, but I'd be doing it with no cost. So in the future, when we get into Q3, Q4, which is going to be the sweet spot this year, I'm standing by that. You'll have an opportunity to refinance. All right, y'all, have a blessed weekend. Fingers crossed we get some resolution. Have a wonderful weekend. Cheers.